Hello traders, Gary Wagner here. It is 1:10 in Honolulu, 6:10 in New York on Monday, 4th day of March 2024, and this is the evening report for gold and silver. Gold has had an amazing run over the last 2 days, with Friday netting a gain of $41 and today picking up the slack, gaining $30. Currently, we have gold trading overseas, down about $3.90 from New York's close. The question is, why did gold rise so much in the last few days when Federal Reserve officials are still saying that they are reluctant to lower rates too quickly? The one key, of course, is the breakout did occur once gold traded above the 50-day moving average, but I believe there's much more to it than that, and we will explore that on today's video report. Silver also had brilliant and strong upside moves, with today gaining 62.5 cents, 2.68%, and Friday gaining 2.09%, which means that silver gained just about $1 per ounce over the short trading span of Friday and Monday. It's trading overseas and actually trading above the close in New York at $24.15. While there are multiple theories as to why gold and silver spiked to the upside so strongly, looking at this dollar chart, we can say that dollar strength or weakness was not the issue. It was down a little bit on Friday, but we're talking 0.29%. And today it was down 0.02%. So the dollar was certainly not the main factor taking gold and silver higher. Equities have been on fire lately. While today, this is the S&P 500, it was down slightly. It did trade to a higher high and a higher low. But equities have been strong and would certainly not take gold higher and silver higher concurrently. So when we look at the activity over the last 2 days, we can absolutely say that after gold hit and broke through the 50-day moving average, the following 2 days caused about a $70 rise. On a technical basis, we don't have strong or major resistance till about 2153. It is based on these series of tops that came in April as well as May of last year. We have some minor tops just below it, but that's pretty much where gold is trading at, 2124. So based on the current narrative of the Federal Reserve that they are in no hurry to cut rates, and most Fed members are not looking for anything until June, with some saying that it might even be later, I feel that the editor over at Kitco News, Niels Christensen, has really a plausible explanation for what we're seeing, which is gold rising against fundamentals that say they should be steady or lower. What he said is the gold market is roughly $25 from December's record highs, and although Monday's rally, which pushed prices above $2,100 an ounce, is shocking, it's not entirely unexpected. Many analysts have noted that gold's rally came out of nowhere and was ignited following disappointing second-tier economic data in the U.S. at the same time. Analysts also pointed out that both gold and silver were ripe for a potential short squeeze, as sentiment had been dismal since the start of this year. Some analysts have likened gold's consolidation to a coiling spring, with the market just waiting for a catalyst. The drive to record closing prices came as the Commodity Futures Trading Commission's Commitment of Traders report for the week ending February 27th showed relatively neutral positioning as bullish bets remain near 4 months lows, and at the same time positioning in the silver market remained net bearish. Analysts then noted that Friday's rally has dramatically changed sentiment in the marketplace and that the market still has plenty of upside potential. The Commitment of Traders data highlighted that the uncertainty in the markets as discretionary traders added shorts roughly in line with the new length, highlighting that macro traders remain historically underinvested for the Fed cutting cycle. But with that said, this represents that a cohort can still add further upside momentum once the macro landscape forecast has come in with more conviction. In other words, Mr. Christensen is talking about a short squeeze that is due to happen, and that makes more sense than any other explanation for why we've seen gold and silver rise as dramatically as they have over the last 2 days. If that is, in fact, a valid assumption in theory for why we have seen gold move up, it shouldn't really move too much higher than the resistance at about $21.50, which is roughly $30 from here. Which is why I have to agree that Niels Christensen put forth the most plausible explanation for gold's rise over the last couple of days, and he concludes that gold looks like it's considering a run towards the record highs hit in December after logging the highest close on record last Friday, with little visible technical resistance evident in the chart. Whether it gets there will likely come down to what happens with the US dollar, bond yields in the coming days, and to that I have to add, as well as Powell's testimony and the jobs report at the end of the week. This has been Gary Wagner wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.